And welcome to our market update as every trading days, early morning in Europe. It's Monday, May 4th, sorry, it started to May 4, 2026, the beginning of the week of 19 in 2026. We're going to check what's going on in the market, what's happened, and what we are expecting for today and the week ahead. But let me have a short review for what happened previous week to understand where we are exactly and what's going on. And then we can check today and the next days to understand what's exactly happening in the market and what we can expect from the trends, price changes, and fundamental data. While the market is still focusing, I mean, the most of the most trades and investment in the market is still focusing on the war, but somehow sounds like the financial markets, especially the stock markets, ignoring the war news and updates, as we could see all-time highs in S&P 500, Nasdaq, KSP, Nikkei, stock markets in Brazil, and many other economies across the world. Those numbers and those changes are telling us that the market somehow ignoring the mess that is happening in the geopolitical tensions. Somehow the market sounds like they accepted the situation as it is, especially looking at the VIX. You can see the VIX is moving between 19.50 and 20.50 in the past almost 3 weeks. And that says that's telling us that the market is counting on a stable situation, or better to say that it sounds like the markets, financial markets, uh, believe that this is under control. It's not something out of the control, unless if we have another war starts next days. But so far, Iranian they gave two new offers to America to end the war and open the Strait of Hormuz, and then they can sit and talk about the nuclear facilities that they have. This is not something that the United States can accept. That's why the tensions are still high. I mean, the tensions are still high. That's why you can see the VIX above 90, but stable. America says that we can continue the blockade that we had, and this blockade we can, just like it is nothing to do with our economy. Yeah, that can affect the European economy hardly. Sounds like the American you're starting to today. What we could understand from the news and updates that we had. Donald Trump earlier today had a post in his own social media, Truth Social, that they are going to exit those ships, cargo ships, that they are stocked in the Persian Gulf, depending on, I mean, those ships that they are related to the economies, and just like they call it the Project of Freedom. They are just like they are for the economies that they don't that they didn't involved in a war, and they have nothing to do with this war. So in this Project of Freedom, the Americans want to escort just like standard ships, cargo ships that they got stocked in the Strait of Hormuz. So this is what's happening here, and let's see how the Iranian going to react. That sounds like Iranian also they're agree with that. This is what we can understand from the post that Donald Trump had. Sounds like Iranian also agreed that they let those ships to pass the Strait of Hormuz. That's somehow the good news. The market accepted as a good news, and the news that has mentioned, the market believes that while there are just like higher tensions in the market, but those tensions somehow it's under control, and that's why the market's reaction was positive. Um, Out of the geopolitical tensions, we can say that in the stock market last week we had an amazing market, amazing reports in the earnings. More than 80% of the S&P 500 members that so far they published their reports, more than 80% they could beat the expectations. This is way higher, way more than average of 76, 7, or about the 75, 76% beating rate that we had usually historically. That can tell us that the stock markets are positive about the earnings, and these earnings and these numbers telling us that we can count on a better market condition for now. That's why you could see the S&P 500 in the Nasdaq. They had a near record highs day after another. In the last, if I don't mistake, past week we had three times the all-time high for S&P 500 in the Nasdaq, and that was amazing. That was amazing, especially leading by tech and AI-based stocks. It's not just about the United States. We could see those amazing reactions in other economies as well, including South Korea, including Japan, including Brazil, and even the Nifty in India or ASX 200 or AU 200 in Australia. Even though today the AU, Australian stock market lost slightly the momentum, but generally they were positive in the last days, and that's telling us that markets in Hong Kong, the Hang Seng also had it printed new records. Those markets telling us that the markets, while they are ignoring the geopolitical tension, they are counting too much on the earnings reports that they had and a stable market. Unless if there is a war again starts, then we can see, we'll probably will see some changes there. But generally, so far, it is positive. And last week, besides that, we had central banks meetings as well with the some inflation number. Starting with Tuesday, the Japanese central bank held the rates unchanged at 2.50 0.75% as it was expected, as the inflation is increased slightly to 2.5%, and generally signaling that probably if this tensions continues, even though it's controlled tensions, if that continues with the higher energy prices that we have, especially for the Japanese economy, which is importing most of its energy, almost 109, more than 90% of its energy from out of the Japan, and especially from the Strait of Hormuz. Those higher energy prices can affect the markets, Japanese markets, rapidly, and that's why the BOG had an almost hawkish signal, telling that most probably in its next meeting, which is going to be held in June, we most probably can see a 25 basis point rate hike. That's what we could understand from the Japanese stock market, Japanese central bank meeting, and also the signal that maybe the Bank of Japan, they had some intervention in a currency market. They supported those two news, supported the Japanese yen, and now we could see the Japanese yen in a much better situation compared to US dollar and other major currencies across the world. In Australia, inflation increased to 4.1%. That's what we can expect tomorrow that the Bank of Australia, the Reserve Bank of Australia, is held in the meeting. With these higher inflation, they can continue their rate hike with another 25 basis point rate hike. We will talk about that. But generally, the inflation numbers that we had from the different economies across the world last week showed that the inflation is still increasing in most of them. Then on Wednesday, Bank of Canada held the interest rate at 2.25 basis point or 2.25% as it was expected. We didn't have any surprise in the market. Canadian economy is still struggling slightly, while the inflation is also slightly high. So, however, since the Canadians, they are one of the oil suppliers in the world, they can be a little bit less affected by the higher energy prices, even though the international prices are high, and that can affect the Canadian internal market as well. But still, they have a little bit more guarantee compared with the other economies. That's why the Bank of Canada decided to hold the rates for now and wait and see the situation. Later, in United States, we had Federal Reserve meeting as well, and as we saw, the Fed held the rates also at 3.75%, while we had two surprises there. One, it was a divided that we had between the members, and we saw that the four members, they voted against this decision. So that's telling us that the biggest divided between the Fed members, FOMC members, since 90s, and that's telling us that the market slightly should be careful about what is going on in the market and the speeches that we will have in the next days from Fed members, especially, for example, in the weekend, they had a Neil Kashkari's speeches, and he mentioned once again about the Iran war, about the effect of higher energy prices on the inflation and interest rates. This is something that we should be a little bit more careful about that in the next days and watch the news and the speeches as well. Federal Reserve also had another surprise. Mr. Powell mentioned that he can continue his period even though it's ending, but the externals that can continue till end of the January, if I don't mistake, till next 2027, next January 2027. That's mostly because of the ongoing suitcase that he has about the Federal Reserve has about that building that they've spent too much money. Most probably Fisher Powell will stay there to conclude or end this case, and then we will see what happened. This is while the Kevin Warsh is getting so close to take this position and get the approval from the Congress. This is generally the statement that we had in the press conference and the tone we had. It was more hawkish than natural. That's why the market counted on that as a hawkish meeting. In Brazil, later we had a central bank meeting, as mentioned in our previous weekly update, that despite market expectation of holding the interest rate at 14.75%, I do expect 25 basis point rate cut because the inflation in Brazil is high, it's more than 4% again, and this is while the economy is somehow is suffering. At the same time, we can see the interest rate is so high. I mean, generally it was almost mostly under 10% and now 14.7%, 14.75% that we had before the rate cut. It was a high level. So they had a room to cut the rate by 25 basis point at least, and that's what happened. And later on Thursday, before talking about the central bank's meetings in United Kingdom and Eurozone, I have to mention that inflation in the Eurozone increased to 3% on the monthly basis. This is April's primary data, but generally we can expect these numbers to happen. The 3% for the headline inflation and the core inflation at 2.2%, even maybe higher. That's what we're expecting to see with the 1% CPI goal on a monthly basis. That can tell us so much. That can tell us that generally the inflation expectation is high. Don't forget that 2 months ago, this inflation of 3% was around 1.7%. That's the effect of the war is here. That's why the central bank in Eurozone, they hold the rate at 2%, the baseline at 2% with somehow the hawkish signal that if the inflation increased, they may decide a difference, but they didn't have any clear signal that what they want to do in the next meeting. In Bank of England, also we had the decision that what was expected by the market, 8%, 8 members voted for holding the current rate while the 1 member voted for rate hike. That means that the market is didn't see any surprises there. Data bank will continue based on the data and stuff like that. So they're repeating the same tone that we had, but generally the markets effect, the market's reaction to both of these central banks, it was somehow the hawkish effect. I mean, it was a hawkish tone that what the markets could I mean, what market expected, not expected, get that. I mean, could feel from those two meetings. The Thursday busy day continued with two more surprises. While the initial claims in the United States fell sharply down to 189,000, one of the lowest levels in years, at the same time, we could see continued claims also dipped to 1,785,000, telling that U.S. labor market is still strong despite the previous signals that the market is lowering. Well, I can say the labor market is mostly stable. Then we can say it's falling down. Still, we don't have any negative surprise there. At the same time, the core PC price index for the PC price personal data personal spending in the income and spending also came, and these data showed that the core PC price index for the March increased to 3.2%, with the 0.3% monthly growth, while the PC price index jumped to 3.5% from previous 2.8%. That's telling us that on a monthly basis, it was 0.7%. That's telling us that this inflation expectations and the data that we have from the oil prices and energy prices affected the market. For the first quarter, it was interesting. For the first quarter, core PC price index jumped to 4.3%. That was 2.7% in the first quarter 2025, but for the first quarter 2026, that was interesting. From 2.7% of the previous quarter to 4.3% this quarter, that can tell us that the inflation expectations is still high. We know that in the first quarter, only on the March we had during this period of the war, and January or February, we didn't have those levels of energy prices. Friday was the May 1st, the holiday in most economies. We didn't have much more data to talk. However, we had the producer price index from Australia. That was not important so much. US Baker Hughes oil rig count increased to 408 from previous 407, and total rig count increased to 547 from previous 544. In general, we can say that the market is counting on the war supply. This is what those numbers can tell us. Today, so far at the May 4 Monday, we had building data from Australia, and what we could see that the building approvals fell by more than 10% in March, while inflation in Turkey jumped to 4.2% on the monthly base, after falling down to 1 almost 9% in March and February and March. I mentioned in the previous week that when we had March data, I told that that's the first reactions on the market can see much higher data, inflation at 4.2%, telling us that the inflation expectation in Turkey is so high, especially after ongoing war that we have between Iran and the United States, that can affect the Turkish economy rapidly. On a monthly, annually, inflation increased again about 32%, 32.4% from previous 30%, almost 31%. Later today, we will have the PMI numbers. This week, we will have the PMI numbers for manufacturing and the service sectors. Today, for manufacturing, and on Wednesday for the service sector. What we are expecting to see for the manufacturing, we don't expect much weaker data. As you could see here, so far in Spain, PMI increased from 48.7 to 51. We are expecting same numbers or even go a little bit better for the PMI numbers for the most economies, manufacturing sector, but the service sector later this week on Wednesday can give us negative numbers or weaker or slowing data. Tuesday, we're going to have the GLT's numbers in the United States for the labor market before NFP numbers that we'll have on Friday. But before that, market will start the day with the Reserve Bank of Australia interest rate meeting. As mentioned earlier, we expect to see the RBA to hike the rates by 25 basis points as the inflation increase about 4%. That can tell us that the inflation expectation also is high. Unemployment level around 4.2%, if I don't mistake, in Australia. That can tell us that the Australian Central Bank, or RBA, Reserve Bank of Australia, will have the room to hike the rates. Australian Central Bank, or Reserve Bank of Australia, was one of the first major central banks that they cut the rates, and they made it so fast, and they made it without stop. I mean, cut, and that's increased the inflation. That was one of the lessons that the other central banks got from Australia, and they moved slightly more cautiously. That's why you can see now that for the third time, you're expecting to see that the Australian Central Bank to hike their rates for 25 basis point. That's not something that other economies doing, and that's somehow we can say that was a good example for other economies. But later in the United States, we'll have the GLTs, and we're expecting to see the GLTs around 6,870,000, slightly lower than previous month for the March. But the thing is that while we have unemployment around 4.3%, and we're expected to see it again 4.3% unchanged of this week's Friday's numbers, at the same time, Uh, we can see that initial claims for unemployment benefits for continuings, both of them claims generally to receive unemployment benefits on still hard, still low. And this is while the creating new jobs or opportunities, we can say the openings also low. But that can tell us that the job market in the United States is still resilient, but stable. It's not so active, but still resilience. Resilience, but low. And mainly because mostly we can say because that we have this deportation of the deportations that we had for illegal immigrants that though as we can see with the lower job market making, still unemployment level is down. As mentioned earlier, we will have the service sector PMI numbers on Wednesday, and we're expecting to see, as mentioned, slightly weaker numbers. But on Thursday, we will have more data, especially inflation and central banks meeting in Mexico. Inflation expected to see around 4.6%, and that's why we are expecting to see that the Mexican central bank also to hold the rate at 6.75% with no change. Well, on Wednesday, we will have sorry, Thursday. It's a Thursday, and in Thursday we will have again initial claims data. We are expecting to see around 203,000, but the market mostly in the United States will focus on Friday's data, where we are expecting to see NFP numbers. We are expecting to see between 70,000 and 100,000 newly created jobs after 178,000 that we had in March. In April, we're expecting not big numbers between 70 and 108, between 70,000 and 100,000 newly created job and unemployment rate unchanged at 4.3% with 0.3% monthly growth on the average income. And annually, that average income should increase by 3.6% most probably. That's what we're expecting from the labor market United States, telling us that the labor market is still strong and can continue this way. With these numbers, I have to mention on the earnings calendar also, we will have the important data to watch. We shouldn't forget about the earnings reports. Still, there are the companies to publish, even though the most important companies, they already published their reports, but still we have many other companies also to publish their reports. And generally, we're expecting to see that markets are cautiously positive about the stock markets. As mentioned, the market risk is around, VIX is around between 19.50 and 20.50. That means that the stock market can count mostly on a stable and under control tensions. That's why you can see the US dollar index is down around 98 mark, while it was almost 99 last Wednesday and Thursday. That's why you can see the gold price is still down. Even though in a bigger picture, I do believe that the gold in a buy situation for the longer time, the same situation we have for the silver. So about the gold and the silver, I'm cautiously positive. For the US dollar index, I'm cautiously negative. For the energy market, especially for the gas, I'm cautious. For gas, I'm around this level of $2.70 and $2.80. I'm expecting the same level to continue. For the energy market and the oil market, WTI, I'm cautiously negative. I do expect the oil price that which is WTI right now trading between 102 and $103, and the Brent oil between 109 and $110. I am cautiously negative about the energy price, about the Brent and oil prices. About the stock market, I'm cautiously positive still, cautiously positive, but maybe we can see technical correction. But generally, we can see still in the bigger picture, I can see still cautiously positive, but the S&P 500, Nasdaq, and the Dow Jones, as we don't have any reason for now, we can say, okay, that's the reason that we can expect to see the correction. Maybe the technical correction can be the option. About the cryptocurrency market, same as the stock markets, Bitcoin trading about earlier today traded about 80,000. Now we can see that 79,800, but generally still positive. The cryptocurrency market also got expected. Got expected reaction as the same stock market as the stock market. So for now, the cryptocurrency market generally, not the Bitcoin and all most of the cryptocurrencies, they are positive and expected to continue positively on their trends. That's what happened in the stock markets, in the cryptocurrency market, forex market in general, the financial markets last week, and what we're expecting for today and week ahead. Have a good day, and thank you for being with us. Bye bye.